Hey everybody, this is Robert Mack with Irvine Real Estate Link, your link to the information that you need to make the right decisions. And today what I want to come to you with is a post regarding supplemental property taxes. And you can't even imagine how many times I get this question from family and friends and people that I come across who have purchased a home using another agent, and they get surprised with this supplementary property tax bill and they have absolutely no idea what it is and why they've received it, and do they have to pay it or not. And the answer is yes, you do have to pay it, and I'm going to talk to you a little bit about what it is in brief. Now keep in mind, if you're working with the MAC team, this is discussed throughout the escrow process so that there are no surprises for you. However, if you're not working with us and your agent hasn't discussed this with you, take a minute to listen to what I have to talk to you about and kind of get a feel for what it is so that you have a better understanding of what it is, so that you're more prepared for when that time comes. Now, supplemental property taxes property taxes generally are based off of the assessed value of the home. Now, that doesn't mean it's what the market value of the home is. An assessed value of a home is the value that the tax assessor's office uses to generate your property tax bill each year. So, the supplementary property tax bill typically is a large amount when you're buying a property from somebody who purchased the home a long time ago. Now, I'm going to use an example of a property that was purchased, let's say it was purchased 15 years ago by a family, and now their assessed tax, their tax base is, they're being taxed on a value of $150,000. Now, on a value of $150,000, I'm going to use a general tax rate of 1.2%. It'll be a little bit less or a little bit more depending on the area that you're in, but 1.2% is kind of a safe number to go by. Now, on a $150,000 assessed value, your tax per year is $1,800, which breaks down to about $150 a month. So let's say you were purchasing a property for $700,000. However, the owners bought this property 15 years ago, and now they're paying taxes on $150,000. But you're buying it for $700,000. So you have to pay taxes on a value of $700,000. So what happens in the escrow process is, depending on what day you close, there will be a certain amount of money that the buyer will credit to the seller for any portion of the property taxes from the time frame where the seller was not using the property. So for instance, let's say that you purchased a property and your closing date is in March, so you have to credit the seller an amount of 3 months of property taxes. Well, in escrow, you will be crediting the seller the tax rate that they pay. So if you have to credit them 3 months and their taxes are $150 a month, you'll be paying in escrow $450 to the seller for their portion of the property taxes that they've already paid for that 6-month period. Keep in mind though, that's not good enough for the tax assessor's office. What'll happen is that for those 3 months that you paid the seller, you paid them based on the seller's tax rate. However, your assessed value, now that you've purchased a property, is $700,000. Now, to give you an idea of what the tax amount is for $700,000, using a 1.2% tax rate, you're paying $8,400 per year, which breaks down to $700 per month. So you can see that if a tax rate of $700,000 is $550 more per month than what the seller was paying, which means that you paid the seller the $450 for their tax rate of 3 months. However, you really owe $2,100 to the tax assessor's office. So since you've already paid the $450 to the seller, you'll be receiving a supplementary property tax bill of $1,650. So don't be surprised when you get that. It's completely normal. Now, if you're buying a property as a short sale and the assessed tax rate was higher, then there's no need to worry about the supplementary tax bill. But typically when you're buying an equity property sale from a seller who purchased a while ago, that comes into play. So if you have any specific questions or a specific scenario you want to run by us, you can always email us. My email is down below. My contact information is down below. And as I said, if you're working with the MAC team, this is all gone over with you in detail throughout the escrow process so that there's no surprises. If you like this video, please share it with your friends and family. And as always, check out my website, irvinerealestatelinked.com, for great buyers and sellers resources. I look forward to talking to you soon. Thanks for watching.